So BlackRock is back at it again, and this time they're rolling out a completely new kind of Bitcoin ETF. This one's a pretty big deal. So, you know what we did? We went straight to the source, their official S1 filing with the SEC, to really dig in and break down exactly what this thing is, how it's supposed to work, and what it could mean for you. All right, let's get into it.
Okay, let me start by asking you a question, and it's a pretty powerful one. What if your Bitcoin, the Bitcoin you're holding, could actually pay you a regular monthly income? That is the entire idea, the core promise behind this new fund. And believe me, it's a totally different way of thinking about a crypto investment. The official name here is the iShares Bitcoin Premium Income ETF. And right off the bat, the most important thing you need to know is that this is not just another spot Bitcoin ETF that tracks the price. Nope, this one has a completely different mission. And we don't have to guess what that mission is. I pulled this quote directly from the filing. The objective has two parts. First, it wants to reflect Bitcoin's price. But second, and this is the real kicker, it's designed to provide premium income. So you're probably asking, how on earth does it do that?
Well, the engine that powers that income is a classic Wall Street strategy called a covered call. Now, I know that might sound super technical or complicated, but the concept behind it, it's actually really, really straightforward when you break it down. Honestly, the best way to think about this is like renting. Imagine you own an asset, in this case, Bitcoin. With a covered call, you're basically renting out its potential to skyrocket in value. Someone pays you a fee right now, like rent, for the option to buy your Bitcoin from you later at a price you both agree on today. And the best part, you get to pocket that rental fee no matter what happens next. The whole strategy really just boils down to this simple three-step process. First, the fund holds the asset. We're talking shares of the spot Bitcoin ETF, IBIT. Step 2, it sells call options against those shares. That's the renting out the upside part we just talked about. And finally, step 3, for selling that right, it collects cash fees. Those are called premiums. And boom, that's the income. Now, this brings us to the most crucial part of this whole thing, the fundamental trade-off. There are two sides to this coin. On one side, the advantage, you're generating a potential income stream from all those premiums. But, and this is a big but, on the other side, you cap your upside. If Bitcoin's price just absolutely explodes and goes to the moon, the fund won't capture all of that incredible gain. You're basically trading those potential moonshots for more predictable income. You can imagine an ETF like this is a pretty complex machine. So the filing takes a lot of time to lay out all the key players, the institutions that are involved in making this whole thing actually work. So who's in the mix? Well, no surprise, you've got BlackRock's iShares as the sponsor running the show. Coinbase Custody is on deck to hold the actual Bitcoin, and the Bank of New York Mellon is handling the ETF shares and the cash. The whole setup is designed to spread the responsibilities across these very established financial players.
Okay, no investment comes without risk, right? And the S1 filing dedicates a huge, huge section to all the fine print. And this is important. This is what BlackRock itself is required to tell you about all the potential downsides.
And they do not mince words. The filing points directly to Bitcoin's insane volatility. They even cite this number, 77%. That was the massive drawdown from its peak in 2021 down to its low in 2022. I mean, that one number alone is a pretty powerful reminder of the kind of asset we are dealing with here. The risks they list really fall into a few big buckets. You've got your standard digital asset risks, volatility, theft, that kind of thing. Then there are market risks like manipulation. Then there are the risks specific to the covered call strategy itself. Remember, your upside is capped, but you still lose if the price falls. And finally, you've got regulatory risks and counterparty risks, which just means laws could change or one of the partners in the process could go under. Now, this is standard language. You'll find it in pretty much every S1 filing, but it is worth hearing every single time. Neither the SEC nor any state securities commission has approved or disapproved of the securities offered or determined if this prospectus is truthful or complete. It's just a stark reminder that just because something is filed with the SEC, that is not a stamp of approval or any kind of guarantee of safety.
Okay, so we've gone through the objective, the mechanics, the big players, and of course, the risks. So what's the big picture here? What's the one thing you should really walk away from this explainer with?
At the end of the day, this entire fund comes down to a strategic choice. It's built for investors who are willing to trade that number go up thrill, that explosive, uncapped growth potential of Bitcoin in exchange for the possibility of a more regular, predictable income stream.
And that really brings us to our final question, the one that this whole product is really asking. Is a steady income worth giving up the very thing that has pulled so many people into crypto in the first place? It's explosive, world-changing, moonshot potential. That's the question this fund puts on the table. And honestly, the answer is going to be different for every single investor out there.